Hello, good afternoon. Welcome to our next episode of Lumida Non-Consensus Investing, live as always. This is a quarterly podcast where we review the 13 headlines, each of the positions of the top performing hedge funds. So we're going to go through that today. We're also going to do it through the Lumida Invest app. I'll do that at the same time. That automatically downloads the hedge fund filings and also identify triggered opportunities. So a few things. First off, one, hedge funds update their balance to S&P 45 days after the last quarter end. It's not a real-time position. That said, most hedge funds don't turn over their entire portfolio. They usually have thematic ideas. They have fundamental ideas that last maybe 1 to 2 years or more, right? Warren Buffett's been owning Coca-Cola since 1986. And you can see their position changes quarter by quarter, and the app will show that too. So the point is, the signal still has validity. The second thing is that because it's 45 days after last end quarter, there could be shifts and there could be changes. Obviously, lots happened in the last 45 days around geopolitics and other things. So that's something to consider. And the third part is that February OPEX is tomorrow, quarterly options expiration. Usually get heightened downside volatility in this period of the month. So if you find good idea, it's probably a good idea just to note it and then wait for a good entry, which probably could be in a few weeks' time. Usually energy does pretty well this time of year, and technology and consumer discretionary and financials don't do well. You'll certainly see that playing out in the market today and most of this week also. Right? So if you find the great idea, make a note of it. You don't have to act on everything. You know, as we like to say, you make your money on the buy, wait for a good entry. So with that said, let's get started. I'm gonna shift gears and jump to the app here. 1 second here. And toggle the app. So what we're showing here on the homepage is the app. You can see the basic market indicators. There are different functions here. I'm not going to actually walk you through all of this now. I'm going to get right to the hedge fund ideas and talk about those ideas. But you can see smart money. We'll focus there. There is a live news feed. So that live news feed covers, it's like your Bloomberg terminal in your pocket. Covers what's happening macro, thematically, earnings, OpenAI, private credit. You can see private credit stocks fall after Blue Owl halts fund redemptions. Echoes of what we saw with Blackstone and BREIT a few years ago. So there's always something happening. We also have this special feature called Trump Watch because Trump is moving markets seeming like every day or so. So it's good to see what he is saying and what he is doing. There's also a dedicated news feed just for macro. As you can see, there's a discussion on mortgage rates, crude, Fannie Mae, Freddie Mac, and all the rest. So let's start with the hedge fund portfolio. So what you want to do is you want to scroll down to Explore Portfolios. You can see that here, or you can hit the Ideas tab or Smart Money tab right there, and you can see a couple dozen hedge funds that we've curated. Most of these hedge funds have skill. Not all of them. We have quant funds here, and we have specialist funds that focus on energy or focus on financials and others. So there's a good to get both quantitative perspectives, as historically they have a good track record of outperforming, as well as deep fundamental ideas. We also have value managers here and contrarian thinkers here as well. So you can see quite a few compelling hedge funds to take a look at. Druckenmiller's in here as well. Now, our team has already gone through a number of 13Fs over this past few days. So we're going to highlight a few ideas and call out some of the key themes. All right. From time to time, I'll probably tap my analyst team for some help to get some of the research notes. To that end, Santiago, I need a write-up from the Slack channel of the 13F ideas. I can't pull it up on my laptop here because it projects on the screen. So if you can just get me a laptop with that Slack channel here, I can go through that.
13F ideas?
Shakar knows where it is. Be good. All right, so let me jump right into, let's take a look at some of the quants. Let's start with Renaissance Technologies, okay? Rentech, this is the late Jim Simon's quantitative hedge fund, an incredible track record. You can see a few things here. So I noticed a few quarters ago, this fund was long what I call animal spirit stocks, names like Reddit and Palantir. They no longer are, and they've been selling those names. That's a big change here. So I can see very quickly the AUM of this strategy, their top holdings, and what they've been buying. You can see that they like momentum. Quant funds like momentum. You can see Micron, they've been adding to. Again, this is as of year end last year. Costco has a lot of momentum, especially recently with the bid in Staples, although it's quite pricey. They bought Tesla, then Netflix. Not always has really worked, right? I wouldn't be surprised if they sold Tesla and Netflix, as these are in downtrends right now. And you can see what they've been selling. One of the common themes that we've noticed is that Mag 7 names have generally been sold by hedge funds. You can see that with NVIDIA here. We've also done the same. I've talked about this on Twitter. We did that before we saw these 13Fs come out, by the way. You can see that there was a Rentech has trimmed Google. Google had a great run last year also when it went from unfavored AI to favored and consensus AI, and other high beta names like AppLovin. Meta, they've also sold completely. This is a theme we see, I want to say, across the board in the quant funds that we are looking at. Again, you see animal spirit names like HIMS, they've been selling off. So what these bars show is their exposure over time. The most recent bar shows that there's less exposure now versus prior quarters. They were actually long quantum stocks. They were long IonQ in Q3. They exited that completely. IonQ raised $1 billion. Oh, terrific. We got a great call out. Hey, Ram, great super app. I finally got access. Thank you, Mauricio. This is the best investing app out there. I think you'll be convinced of that. And you also see a reduction in exposure to capital markets themes. So you can see CME Group, less exposure around that. SAS, these guys are selling down Intuit, and they were selling down Snowflake. So Rentech did a pretty good job of avoiding some of the names in SAS. Now, interestingly enough, they've also been selling down late momentum names like FedEx and UPS. So FedEx and UPS have had quite a run. You can see the chart for FedEx here. FedEx has gone parabolic, and this is really the theme of the market. The Dow Jones has been outrunning the S&P, which has been outrunning QQQ, which has been outrunning Bitcoin, right? So it's old value names that have been doing really well, like logistics companies, industrials companies, energy names have been doing really well. Essentially, themes that have been out of favor and people haven't been focused on, those have been doing really quite well. I'm going to do a weekly view to see a view of the weekly candles. So they recently exited FedEx and UPS. They're very skillful. They know how to get into momentum. They know how to get out of momentum at the right times too. They were in Walmart. Walmart's had an incredible run also. Walmart's now at a 45 PE. They de-risked Walmart at the end of December, somewhere around here. So pretty good timing. Of course, that trend continued. So they were in GameStop. That's an animal spirits name. This is a retail stock. So these quant funds have started to appreciate the power of social media and incorporated that into their investing. I find that super fascinating. But again, by and large, the theme is you've seen quant funds exit animal spirits more generally, and also Mag 7 names. All right. So let me go to Sigma. Can you pause the mic real quick? You can. All right, cool. So now let's shift gears to Druckenmiller. That's Duquesne Family Office. There's some legendary investors out there. Buffett's obviously one. Druckenmiller is another. Point 72 would be another. We're not going to focus on Buffett today. One, there weren't that many great insights or takes here. He bought New York Times, pretty expensive. He was selling some Amazon. I think Buffett's been making a lot of mistakes lately. And more importantly, Druckenmiller is a better investor than Buffett. He's got better performance. And I would also make the point that point 72 is better than Druckenmiller as well. So we're going to spend a lot of time at point 72 and also on the quants. But we'd be remiss if we didn't talk about what Druck is doing here today. So Druck added to financials XLF. Again, this is at year end last year. So financials haven't done that well recently, especially with the credit card cap and rates discussion at 10%. That's new for this year. And then some increase in DQs. He's also bought Brazil. You can see Brazil there, EWZ. We also own Brazil. So more international exposure and equal weight RSP. This goes back to the theme of underweight Mag 7, right? So we saw that just now with Rentec. You're seeing it again with Druck. He continues to own Google. So he's in fact added to the Google position, added to Amazon, but has a large position on equal weight. What did they sell? Teva. Teva's an interesting name. So I think in one of my first quarterly 13F reviews, we talked about Teva, and we got it from Druck's 13F. You can see Teva's had an incredible run. And look at that run. I mean, if you bought here's when we flagged it in our 13F review way back when, then now he's selling. Ideal time to sell, in my view, is you see that massive inverse wick right there. That's a moment of peak euphoria. That's when you get out of the water. I don't know when Druck did that, but on the monthly candles, you can see it's overbought too. This is a really cool feature of the app. I can toggle from daily candles to monthly candles. The larger time frame you use, the less noise there is. This is a good sign of exhaustion. Okay, so Teva, he has sold out of. Druckenmiller loves to sell parabolas. Teva is in a parabola, so he sold it, and he doesn't look back. What else? He bought and trimmed a couple semis. He trimmed Taiwan Semiconductor, and let's go to view all. Now you'll notice here that the AI has its own independent view, these three dots: fundamentals, management guidance, and stocks. That first dot is the AI doing its own independent buy-side analyst work on the name. And green is good, red is bad. Management guidance. This is when the AI goes through the quarterly transcripts and looks at guidance. Is management saying the right thing around a buildup and backlog, pricing power, market position? If management's saying the right thing, it's good. If not, it's bad. And that doesn't mean that management could misrepresent or just talk up a good game. That can happen too. This is just trying to read the tone of management. Right? If management's talking about price cuts and losing market share, then this would be red. And that last one is a charting view. It's our charting AI agent and identifies whether you should stock or buy. This is in development. It's not bad. It's pretty solid. It's got a good trend following dynamic built into it. It's learned some of the basics of mean reversion. We're teaching it more, but it's probably better than your average at-home trader. Needs more work, but it's not a bad way to prioritize and identify opportunities. So I like to use it for that purpose. Sometimes you'll see that there are no dots here. That means that the AI hasn't been trained on those stocks yet. It is expensive to do all this stuff. So we prioritize S&P 500 names and another 500 names that are in our model portfolio and some other names in our coverage universe, okay? So what else? So he's selling Meta. I mentioned earlier, you're seeing a lot of these hedge funds sell Mag 7 names. Druck selling Meta here. Obviously Meta involved in a lot of CapEx spending to power their AI ambitions. GE Verona. GE Verona has been an incredible name in industrials. It's also incredibly expensive now too. You can see that on the chart. This comment on the top is essentially a way to summarize like a Bollinger Band. This is plus 2.5 standard deviations. So it is overbought. and the valuation's getting quite up there. The AI, when you click on a name, it'll give you a bull bear case, and it always has a point of view. It's important to have a point of view, so you're not coming in with a blank slate. The AI says here, hey, look, bear case is that the wind segment Q4 orders have plunged 41% amid regulatory and execution setbacks. The PE ratio is very high, 56 times. To put that in perspective, NVIDIA's PE forward is 25 times. This is very expensive. This is just running on momentum. It's running on momentum. Eventually, momentum breaks. You don't want to be in here. These are larger players, so they're not waiting to time it perfectly. They'll get out beforehand. You'll see Vistra Energy, nuclear energy name. They got out of this before the nuclear independent power producers corrected. So very good timing on that. They sold somewhere in this area here, right? Somewhere in this last quarter. So they took a bit of a drawdown on those names, but did a good job, getting out. Okay. So what else on Druck? Hey, nice call out. Thank you. Yeah, the app is really cool. Look, I'm the customer for the app. So if I'm happy, many people will be happy, and we still have a lot more to come. I'm only showing one narrow feature of the tool yet. So there's a lot more to share with you all, which we'll do in the course of time. What else? So what's interesting about Druck is that he sold both CapEx pairs like Meta, but also CapEx receivers. He trimmed both legs of that. I think that's a good idea. That's something we've been talking about. CapEx pairs, if you have a lot of CapEx, on average, you lag because those are expenses. CapEx receivers have done really well and have outperformed the CapEx pairs. CapEx receivers, essentially, it's like semiconductor supply chain. Those would be names like NVIDIA, Taiwan Semiconductor, KLAC, Lam Research, and others. But the key point is that CapEx receivers are now betting on a lot of future expectations that may not be able to be met. Okay, so let's move on to some other ideas. Actually, one other idea from Druck. He's adding to airlines. I personally don't think it's a great idea at this point in time, and maybe it's a late idea. Maybe he's modified his views on this, but you can see quickly here the change in the themes and the exposures. There's a lot more pharma. We like that. Healthcare is a rough sector, but pharma's been a good neighborhood. He's added to software. So he bought the dip in software last quarter. You can see the trimming in Mag 7, added to retailers, a bit of breadth expansion, added to emerging markets, and other ideas there too. So what else? On the airlines, let me see if I can pull up some of these airlines here. So the airlines have a good story on the fundamental basis. It's aging demographics. The boomers are traveling. They're spending on travel and leisure. All the transcripts show this. I mean, it's a great story thematically longer term, but technically the timing is just bad. Obviously, oil prices are going up with the geopolitical risk around Iran, and that's hurting airline stocks. This is another example I made earlier where this is end of last year. You've got to update based on what's happening in real time. And this category is under a bit of pressure. This is Alcoa actually, under a bit of pressure due to some of the geopolitical risks. So I can go to the top, type in UAL, there's United, and we'll pull up the bull bear case for United. Again, good fundamental story here. I won't walk you through that. Strong liquidity, strong free cash flow, but facing some pressure from oil. My AI says stock it though. My AI says, hey, look, you want to give this a stock. So my AI likes Druck's view. When you go to the bottom of any given stock, by the way, you can see what the smart money is doing. You can see who's buying United, who's selling United. So Druck still has exposure to it. He ticked up his exposure somewhat. It's much less than what it was last year. You can see 2 Sigma added a position, 0.72. David Tepper from Appaloosa. Voloridge has some exposure, more capital. Citadel is kind of flat. I don't put JP Morgan in the smart bucket, but you got to include them because they're a big whale, and so you want to see what they're doing from a flows perspective. And there you go. So let's shift gears now to 0.72. So I like 0.72 a lot. Now, 0.72 is run by Stevie Cohen. He is, I think, the last chapter in the original Market Wizards book, or maybe the second Market Wizards book, which is a fantastic, very entertaining read, collection of short story interviews with these fund managers. Very thoughtful individual. So he's beating his competition. He beat his competition last year. He paid himself $3 billion bonus from the performance of 0.72, which includes something like 3,000 traders in a pod style format. So his peer group would be Citadel, Millennium, Balyasny, and others, and he outran those names last year. He's got an incredible track record. So I think he's better than Druckenmiller. I think he's better than Warren Buffett. So we like to see what he's doing. Because it's higher turnover, again, what he held at end of year last year may not be what he holds now, but you can see like Taiwan Semiconductor, he's been long that for a while. It's not that much turnover. If he's in a name or he's selling a name, you can see there is generally consistent exposure. You can see there's a trend around it. Okay, so let's go through some of the highlights. One is 0.72 loves momentum. Momentum is the eighth wonder of the world. Momentum exists in real life. It also exists in asset prices. So he added to TSM. TSM is outrunning NVIDIA. TSM is a CapEx receiver. They're priced cheaper than NVIDIA. It's more expensive than it's been historically. It's obviously done quite well. And you can see it's up 200% in the last 5 years, up nearly 80% in the last 1 year, and up 12% year to date. So when you click this time index here, you'll see the returns change up there. Our AI also likes it. Our AI is not bad, right? AI's got potential. The AI has a bull case on it, revenue growth 44%, net income up 61%. So, the multiple has gone up somewhat, but it's been supported by earnings growth. And you can see who's buying it, who's selling it. We've got Harvard Management Company in here, Altimeter, Acadian, Viking Global, but also players selling it, JP Morgan, Renaissance had a slight trim, and others. So I like the TSM over NVIDIA idea myself. I wrote this on Twitter 2 weeks ago, by the way. So what else are we seeing from 0.72? He's got some interesting names that others aren't talking about. So one is, let's go to the new buys. One is Lite, Lite. We own this name too. We actually picked this up earlier this week. I wish we got it when he got it. When you see the chart, you'll see why. But this is up 700% in 1 year. This is momentum. This is momentum. Okay. So Lite is a player in the photonics sector. They cater to telecom, data center, and industrial markets. Telecom doing well. Obviously, data center's got a big build out there. And you can see quite a number of funds have been buying this name, Situational Awareness, Brevin Howard. 0.72 has some exposure to it. So they have a small position, but I thought it was a notable position. If they got a bigger position, it would move the name because it's a smaller market cap security. Two Sigmas in there, Millennium's in there. Even Bridgewater has some exposure to that, and EQR. The quants love this name because the quants love momentum. Okay, so that's an interesting idea. Also owns J&J, Johnson & Johnson. Now, if I want to save this name for later, is what I'll do. I'll go click here, and I'll put this in my watch list. So I'll click here, my watch list. It updates my watch list. And if I will get a notification when this is a good asset to buy from the AI, because how many times do you add something to your watch list and then you forget to act on it? What you really want is a notification from the AI when there's a good time to buy. So I'm stalking a couple different names. You can see some of those names here. The AI doesn't like all my names. It doesn't like Bumble, which is hitting 52-week lows. So AI is not bad, right? AI has good ideas. And the AI is saying, maybe take a look at LabCorp. LabCorp is a cool name. I like LabCorp. We actually already own this. But LabCorp is part of the aging demographics baby boomer theme. People are getting more treatments than ever from Quest Diagnostics and LabCorp. And you can see that they've got good revenue growth, they have operating leverage, and the demand for testing just continues to increase and increase and increase. We put this in the high quality compounder bucket. This is actually a Lumida 2026 stock pick also, but that's an example of how we would use the watch list, smart watch list, AI native watch list. Robinhood doesn't have anything like what I'm showing you. So let's go back to 0.72. What else? So he bought J&J. Let's go take a look at their J&J exposure. Now he's got hundreds and hundreds of stocks, by the way, hundreds and hundreds of stocks. So keep that in mind too. And he's got stocks across multiple different themes. They're diversified. So if this is what the best investors in the world are doing, they're not taking big concentrated positions in 20 names. They are doing the work on hundreds and hundreds of names. Look at Johnson & Johnson. The AI likes it. The AI is stalking it. Our AI, you can see the fundamentals are green, guidance is green. Stock is saying, wait for a pullback. Stock means when you get a good entry, take it. It's got the free cash flow. It's got a big oncology pipeline. Oncology is perhaps the most attractive area within pharma and biotechnology also. So, they've got a good story, and that the AI will give a technical readout. So you can see why the AI thinks what it thinks. It's a stage 2 advance, long-term upward trend intact. It does see that there could be a blow-off top happening, and it's extremely overbought. That's why I said stock. And here's the chart. Sure enough, it's got a big uptrend, long-term advance, and there you go. Okay. So other ideas that they're doing, they bought utilities. I love these obscure names. I love it when I see a hedge fund buy an obscure name, because there's an opportunity there. It's more chance that it's non-consensus, it's under-owned, and it's part of a theme that maybe no one's talking about. This is utilities. So utilities have done very well year to date. Look at RSPU, look at XLU. XLU is almost near the highs, pulling back now as rates go up. They're kind of like bond proxies, right? So they move inverse to rates. But this is Amarin Corporation. This is AEE. The AI likes it. It's done 12% in the last year, but it's done a lot more. It's done much of that move recently. And it's got decent EPS growth. This is a name that I would just go research. We'll take it offline, just kind of research it. That's the point of this process, is idea generation. Here's another one, Black Hills Corporation. So this name is up 23% in the last year, about 5% year to date. And it's a utility company also in the electric and natural gas sector. So this is a data center play. It's a picks and shovels bet on data centers. They've got dividend increases. Dividend paying stocks been one of the best performing factors year to date. So it's also linked to that. You can see 0.72 has been buying this. Two Sigma's been buying this. They both bought last quarter. Millennium, Brevin Howard. So the quants like this. AQR owns it too. Maybe there's something there. What else? What did he sell? You know what they sold? They sold payments. They sold Block. Right? A lot of people are buying payments. 0.72 was selling payments. Good for them. Payments continue to drop. So you can see XYZ there. They still have some exposure, but they've been selling that down, right? They don't want to break this market. My guess is maybe that's why they're selling gradually. You can see their exposure peaked 2 quarters ago, and it's been downhill since then. What else? He sold SaaS too. He sold software as a service. So they were on the ball thematically, right? Snowflake. They reduced their exposure, but team they added. So that's a software company. They did add to that. What else? MongoDB, they've been selling down. MongoDB, very expensive name, great business, but very expensive. Price is what you pay. Value is what you get. And me highlight a few others for you here. These are their holdings. I'm going to go to, I'm going to flip back to the left and take a look at the thematic changes. Semiconductors, they reduced exposure. Staples, they increased. Tech hardware, that would include names like Dell, Hewlett-Packard, that type of category. They reduced exposure there. Industrials, they increased. So their thematic exposures have generally been pretty good. Financials didn't work out, but their other themes, by and large, worked. You can see their factor exposures too. This is a new feature rolled out yesterday. So their factor exposures summarize the type of strategy they're running. You can see that they own growthier names in terms of earnings growth or revenue growth. They somewhat higher valuations. They have a preference for quality. They're buying real businesses, and not too much sensitivity to interest rate risk or oil price risk. So when we look at these other funds, we can look at their portfolio factor exposures and very soon be adding to the app what a stock's individual exposures are. Okay, so like animal spirits would be very, very different than what you're looking at here. Animal spirits would have negative value, 2 standard deviations, high growth, and high risk appetite and low quality, right? So they're not doing that. That's 2 sigma. So 0.72. All right. It's a beautiful portfolio. You know, when you look at portfolios often enough, you can start to see a thought process around there. I don't agree with everything I see, but hey, maybe I'm wrong. I mean, they've been doing this pretty well, right? They've been trimming AMD. I like that idea. I think it's more expensive than NVIDIA. They're not as positioned as well as NVIDIA. And yeah, I think that makes a lot of sense. They bought the dip on Oracle. So we saw a number of names buy the dip on Oracle, including Bridgewater. That was a mistake. Let's see. They also had some names like Futu. This is an animal spirits name in China. Kind of interesting idea. Yeah, so quite a few names. So you can see they've been selling off Airbnb, Dexcom. They've been selling off high valuation, high beta names like Dexcom and Airbnb. Okay. They reduced some exposure to private credit. They sold a large chunk in KKR. These names have not done well in the last few weeks. If you see the headlines around Blue Owl and gaining redemptions. So it's a thoughtful portfolio. They've had very little exposure to EVs. We agree with that too. We think EVs are probably going to be in a world of pain. So there you go. Let's shift gears to the next fund. How about Citadel? Let's take a look at Citadel. Ken Griffin. So I can search there, or I can click Citadel. Let's see how they're doing. So Citadel is another pod shop, highly quantitative. You know, the difference between Citadel and say Millennium is Millennium, you've got a lot of distinct pods that don't coordinate. Citadel has proprietary signals. They have a house view and a house approach, and they train up their teams to use these tools and technologies. You know, they have a good track record also. So Citadel, you know, they're a market maker, so that's something to consider too. So it's not as if this is revealing all their kind of proprietary views. They may hold inventory, but I think there's still signal here overall. Google, Microsoft, or Micron, and Amazon, they've been adding to. Okay, so that's notable. Google, an AI winner. Micron, a winner, a CapEx receiver winner. And also they added to Broadcom. They're one of the few funds to add to Broadcom. We saw a lot of funds actually selling Broadcom. They sold down QQQ and the S&P. That's interesting, right? You can see they reduced exposure to Microsoft. These guys also had MicroStrategy. They've been reducing exposure to MicroStrategy. They've been reducing exposure to Coinbase. I'd say most of these views were correct. I mean, to the extent they did breadth expansion, their sells were all right on the ball, weren't they? You can see the Max 7 exposure declined, semis declining, picking up some emerging markets. And what else about Citadel? So they have more pharma healthcare names. We like that idea too. So, healthcare has been a difficult category, but J&J has done well, and they've picked up a couple of names in healthcare that we like too. So there are quite a few names that these guys own. So the best investors are highly diversified, right? They picked up AMAT, which is a bet on memory. They picked up Merck, that's a pharma play, added exposure to that. ISRG, they added some SoFi. No one's perfect. What else? Added some Medicare Advantage. That's Elevance. Now, these recent buys haven't really done well. So I'd be curious to see how this updates to the next portfolio. Medicare Advantage been under a lot of pressure. SoFi and these animal spirit names are in bear markets now, right? So again, this is as of year end last year, okay? They've been reducing GM, which has had an incredible run. We've talked about GM on this podcast before. They're starting to kind of sell that position. For some reason, they've held on to Chipotle, which has been a long time bear market. So our RAI is saying sell now on that. I think the AI is correct there too. Let's shift gears now and go to Sailing Stone. So Sailing Stone is a specialist energy fund. So I'll click on Smart Money. I'll click on Sailing Stone right there. We've got Soros in there. If we want, we can take a look. And let's see what we have. This name, this is interesting. This is our top holding. This is a natural gas play. We own this actually, Antero Resources Corporation. So Antero is a prominent independent natural gas and liquids and producer operating the Appalachian Basin. There's a lot of increased demand for nat gas due to data centers. So you can see the bull case around it is right here. They've increased their free cash flow. They expect demand growth around LNG. And if I want, I can look at what management is saying. I can just click on view full transcript analysis right here. So you can see there's a summary of the business line. And then the AI will go through and extract the key verbatims from management. Quote, our goal is to be the most efficient, capital efficient developer. So they're shareholder friendly. We are well positioned to capitalize on significant natural gas demand growth expected. The AI will then go identify the key metrics relevant to the business. So you get all the signal and none of the noise, right? You see the cash flow generation, the production volume highlights, you see the debt reduction, okay? So the big theme coming out of Sailing Stone, we think this is a smart energy focused fund, is natural gas midstream. We like that idea too. That idea, natural gas is going to be essential to powering data centers. It's the cleanest form of energy. Nuclear is not coming online fast enough. There's pressure on solar and wind from a policy perspective. So you see that also in Williams. This is a natural gas play also. So we don't own this, but you can see that that's an insight from a hedge fund that has some expertise. They also sold Cameco CCJ, which is a leading nuclear energy uranium miner based in Canada. So they sold that. That had quite a run. And they also sold some of the independent power producers also, like Constellation Energy. They're reducing their exposure to that category. Both of those names have been under pressure for the last 4 or 5 months. So it looks like the market sniffed out the fact that they may be selling. Let's go to healthcare. Healthcare is, it's always an interesting category to take a look at. A lot of subsectors in the healthcare area. So I like to see what Larry Robbins is doing from Glen View Capital Management. So by the way, you can get this app at lumidainvest.com. You want to highlight, Santiago, where you want to go? Just go to lumidainvest.com. There you go. So if you go there, you can find the link. Right now, it's free, so take advantage of it while you can. It's in test flight. So test flight is an app within the Apple App Store. It's not on the main App Store yet. We're still iterating. We're getting valuable feedback from our clients and customers. We welcome your feedback too. It's also available on Android. We're rolling out features every week. The devs are unstoppable, okay? So here's Glen View Capital Management. The main takeaway from Glen View is that they have a lot of style drift. They've been deviating from healthcare. If you look at their recent buys, no, I don't blame them. Healthcare's been a hard category. Medicare Advantage, policy risk, rising costs. Pharma's been the one area that is doing well, and biotech. Biotech's. We'll see how it does going forward. But those are really the two areas interesting. But he bought AMD at the wrong time. That didn't work out too well. He bought Expedia. That didn't work out. This is called style drift. When you have a hedge fund manager that's a specialist in healthcare and they don't like their category, they go shop around in different categories, but they don't really have the expertise. It doesn't necessarily work out. They bought Global Payments Network way too early. They bought this payments company that's in a bear market. We bought this name 1 or 2 days ago, actually. So they had a good, or we're stocking it, I should say. We're looking at this closely. Bought 1 or 2 payments companies recently. I think there's been a lot of pain there. Yeah, this company reported well yesterday. And, it is in a downtrend. You can see that here. But it's getting pretty darn cheap. They're a merchant acquirer. So they compete with Fiserv and Adyen and Stripe, but they're in a very different market than, say, Stripe. They're not doing online customer acquisition per se. So that's the main takeaway from Glen View, is that I think the read is that he doesn't like healthcare, so he's shopping around other categories. Tenant healthcare, he's been reducing exposure to. That hasn't really worked. That name's been selling off here. You can see that to the day. It's overbought and it's been selling off very recently, right? So what else? Let's take a look at Voloridge. Voloridge is a less well-known quant fund. I think they're one of the best. I actually was an investor in Voloridge when they were very small. They had 100 million AUM. Now they have billions of AUM. They will not take new capital. It's run by an individual named David Vogel, who went to MIT and studied what we now call machine learning AI back in 2000. So we used to compete in a modeling competition together. I remembered his name. I ran across him in 2011. He said he was starting a fund. I said, I'm in. And that fund has done extraordinarily well. But so you can see they bought Marsh. This is a clever, wait, what is this? Take a look, 1 second. It's not Marsh McLennan. MRSH. Got it. So this one our AI's got to learn more about. Hasn't seen this name before. So probably in a day or two, we'll get a view on that. Added exposure to Amazon. That was too early. Costco, they added exposure to. So this is a momentum idea. The only way you can own Costco is if you are betting on momentum. AMD, they got that wrong. Netflix, they got that wrong. I think the main takeaway from this is that a lot of quants have been under pressure this year because traditional style factors haven't worked. You see that in some of these names here. These high momentum names haven't worked. He sold Microsoft. A lot of people have sold Microsoft. Microsoft hasn't really done well. They sold Broadcom, Accenture. They sold on NVIDIA. They sold on Marsh McLennan. And you can see they have a preference for quality. We're going to add momentum factor here very soon. And what else? Added to MasterCard, sold down SoFi, sold down Robinhood. So animal spirit names, they've been selling off. That's interesting, right? What they've been buying are more dividend players. Look at AT&T. AT&T doing really well, along with other telecom names. So AT&T's up about 14% year to date. If you look at the telecom ETF, I think it's IYZ, you can see that it's done quite well. look at like, say, Verizon. Some of the hedge funds have been buying Verizon. So the world has shifted towards dividends most recently. That's the move in Verizon. You can see most of it's been year to date, up nearly 20%. And we're just a month and a half into the year. 20% is about the return on the S&P last year. So quite the move there. What else? So Two Sigma, let's do Two Sigma, and then I'll open it up to some questions. Okay. Two Sigma, also one of the early quant funds, extraordinary track record, mostly proprietary capital, based in New York. So what I'll do here is I'll go to explore portfolios, and we've got Michael Burry in here. We've got Howard Marks from Oaktree. We've got Bob Rabati, who's a non-consensus thinker. Okay, there's Two Sigma. Great, let's see what we have. So Two Sigma bought the dip in software. Two Sigma bought the dip in software. So they were early. So if you bought software after January 1st, you bought it at a lower price than Two Sigma. You're not doing that bad, right? So now they added to recently. They added to AMD. They were wrong on that. Taiwan Semiconductor has been working. They added to some retailers, TJX. Note this, they also trimmed down Meta. That seems to be the common theme. It seems like every hedge fund has trimmed Meta. They've trimmed exposure to financials. They also sold Walmart. Walmart has momentum, but it is expensive. Two Sigma seems to like momentum and value together. I like those two in combination also. And pretty similar profile to what we saw with 0.72, growth focus, and not too much macro sensitivity. And let's see, what else? They trimmed their exposure to Google. Okay, so Google became a very popular idea in November of this year, and they trimmed their exposure. We've also brought down our Google exposure as well. So everyone loves it now, so there's really no one left to buy. Sometimes that happens. And they also are selling cybersecurity stocks. Okay, cybersecurity is a sub-bucket within software that is probably the most expensive bucket within software. It's under pressure too. Okay, so that's what they're doing. They're buying GoDaddy. GoDaddy's been a falling knife. They've been catching the falling knife. Look at this. This is GoDaddy. Starting to look pretty darn cheap. Our AI doesn't like it quite yet. So these bull bear cases are updated quarterly, by the way. So this forward PE ratio could be dated by a couple of weeks. Keep that in mind. We'll make this more real time in the coming months as we get more data sources onboarded. But yeah, so Two Sigma's been buying the dip on GoDaddy. They've been adding to the position as it drops. We think that's an interesting idea to stock. You know, it's coming back to 2024 levels, and they're a leader. They've been adding to interactive brokers. You know, we like this idea too. It's a cheaper version of the theme that Robinhood is a part of, right? It's done well. Done 25% in the last 1 year. We've talked about interactive brokers here before. A lot of hedge funds are adding to Lam Research, by the way. The question is it crowded or not? But Lam Research, obviously a beneficiary from memory. So let's see. Lam Research. These are all correlated with Micron and SanDisk and others, okay? So we did see some hedge funds selling SanDisk, by the way, but Lam Research seems to be the consensus hedge fund semiconductor favorite. TSM is also favored. There you go. There's SanDisk. All right. AI doesn't like SanDisk, though. The fundamentals not great on SanDisk, according to our AI. And Western Digital, which has a significant stake in SanDisk, announced this morning they are selling a number of shares. But yeah, the AI points out that the valuation is much higher versus the peer group, and that there's a lot of cyclicality. So AI is smart. AI knows that semis go through cycles. Okay. None of the hedge funds own JP Morgan. They used to own JP Morgan before. JP Morgan's too expensive now. Okay, and financials have been under pressure recently. We've talked about that. Let's take a look at that. So there's JP Morgan starting to round. Maybe here, that little inverse wick, that green candle, that looks like that was the top. And it's been under pressure recently, along with a number of other financials, right? Fantastic business, great earnings, but got a bit expensive, okay? So with that said, let's see. Cool. What are some of the questions? Let me take a look. General view on staples. Let's take a look at staples. Okay, the market went up since we started the podcast, so that's bullish. The market likes when we're on air, doesn't it? So Mr. Market likes the Lumida content here. Let's go to XLP Staples. So this is Staples. Staples has the whole safety trade. That's what happened with Staples, right? There's a lot of crowding in Staples. I don't like it. I think it's a flight to safety. And then as tensions and fears dissipate, I think this goes down in price along with something like the VIX. But you can see Walmart is a big part of that. Walmart has been going down recently too. It's too expensive. Costco's a big weight in this also. So I'm actually not a huge fan of staples. These are just too expensive. You know, you're paying for defense. You're paying for defense. Any interest in rare metals? So, you know, very interestingly, we are now entering a period that is seasonally negative for commodities, technology, financials, and industrials, pretty much everything but like energy stocks. And that's certainly playing out in the markets today. You can see energy is doing well. Some of these are doing well too, like utilities and industrials, although they're seasonally unfavorable also. So I'm not a big fan of the rare earth materials theme. I think it's overblown. It was hyped up in mid 2015 or so, and a lot of these companies don't make any money. It's a thematic idea. It comes in and out of favor. It's really about timing it. There are not many quality compounders. You've got a lot of rare earth materials companies that have rights to land, but they don't have permitting. So they're not really doing much. They're not actually getting in there, getting in the ore, extracting value, and then selling it. So really not a big fan of that theme. What else? Anything else? We can go look at some of the comments and the notes. So again, just a friendly reminder, go to lumidainvest.com. You can check out the app there. We have more coming soon on the app. Let me highlight a few different points on the app as well. So the app has a real-time news feed, which is very powerful. I mean, I start my day looking at this, even before I get my morning coffee. This is a great way to just orient with the live news feed organized by different themes. And then front page headlines, I'll usually click view all right here. And our AI bot will go through and get the main headlines from major periodicals, and I find that helpful. So Fed minutes reveal little appetite for rate cuts. Okay, that's bearish for the market. Oil jumps 4% after Vance says Iran ignored key U.S. demands. Middle East strikes on the table, obviously bearish for the market. And yeah, so you're seeing that news play out in markets today. You could see that last night, actually. What else? And then this other area is allows you to look at themes and what themes are working here too, right? So there are a number of themes. You can see there's an animal spirits theme. If you click on that, you'll see different sub-themes like recent IPOs, hot money names, memes. There's best versus the rest. These are like more Warren Buffett type ideas, quality, buybacks, high dividend yield. So if dividend yields are working, maybe I click on that. If I like an idea in dividend, if I want to find an idea in high dividend land, I might look here. Obviously, if the dividends are too high, that could be a source of risk, but these are generally quality dividend players in this bucket. So what I can do here is filter. I might filter this by clicking that filter icon, and then I can select stocks that satisfy certain criteria. There you go. So I might say, show me anything that is green, green, green with a buy now or stock. And then I can subset. And the AI is saying, hey, take a look at Verizon. We talked about that a bit earlier. Take a look at Mercury. I say, gee, Mercury is interesting. I like Mercury because insurance stocks might do well this year and this period. And, there's Mercury. Maybe now is not the best time. Maybe now is not the best time. We like this name overall, but timing does matter. So Texas Pacific Land, those are interesting names. We don't own them. We think they're too expensive. Texas Pacific Land Corp is a company that generates royalties. So it's a very capital efficient model. They rent the land out to operators, and the stock's done really well. I think the momentum has slowed somewhat though. Let's take a look at, let's zoom out here. So year to date, it's up massively. 1 year, it's had a nice U-turn here, right? So it's got a lot of momentum around it. You can see some of the stats. So I haven't looked at this name recently. It's obviously got a lot of momentum. So it's probably more of a trade, right? You don't want to be in for the next U-curve, but it does have momentum and it's on theme. It's on theme for energy. So that's something to consider. Let me show you also how these little indicators work. So you see these O's, like generally these green O's are bullish tactically. They're highlighting entry points, and those red O's are tactical trims. It's not perfect. This is all point in time data, by the way. So it helps guide you. You can see generally it's done a decent job. B is when you see a what's called like a bullish wick. Now you see, some mild capitulation there. But if you're, buying near the green, technical signals, you can create potentially a bit more value. And these numbers here, 12 and 13, those are DeMark candles for those that are familiar with DeMark, D-E-M-A-R-K. You can look that up. Pull up the question on the ETF. So we are hiring a compliance firm to build out a compliance program. Launching an ETF is a lot of work. You got to register with FINRA, all your marketing materials. So, but we intend to do this. We are in process. We're interviewing a number of compliance firms. So thanks for asking that question. We're investing more in that offering. Cool. Thoughts on crypto? Click that one. I think crypto's in a bear market. I've been saying this since the fall. I think this is an avoid, along with a lot of animal spirits and a lot of high beta names. More generally, although there are a couple high beta names that might be interesting, maybe in the space category. And I showed you one earlier, LTUM. That's an interesting high beta name, high momentum name. So there's some out there, but you really got to look. You can use this app for that idea generation, by the way. So you can find a theme under animal spirits and then see what is working. We're also going to add more dynamic idea generation. So that's to come. In other words, have the AI scan for stocks have particular attributes, like a stock screen, and then load that here automatically. But if I pull up Animal Spirits 2026, these are more recent names that you're seeing people talk about. So I might filter this by something like this, green, 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 and then not many names pop. Energy Fuels is one of them. So, the AI thinks this is interesting. I'm not sure I share that opinion, but, that's one way you can get idea generation, right? So let me see what the other questions are. Let me scan there. Scroll up. Click on that. Are you bullish? Yeah, I think in private markets, you have a pretty good opportunity around this. We're closing investment in a drone technology company. It's not Anduril. We looked at Anduril, which think it's just very expensive right now. And Anduril is valued at 60 billion to 100 billion, depending whether it's primary or secondary. The leading defense contractors in the US are $230 billion. Anduril upside is going to be in that area, maybe a little bit more because it'll have more hype. But we'd rather find a sub $10 billion name that has a more upward trajectory behind it. But yeah, I think drones are going to be a big part of the Pentagon refactoring the defense tech stack, right? Hedge set the spending $1.5 trillion on defense, increasing 50%. So they're shifting from these large, bulky carrier battle groups to light, attritable, high volume drones. Taiwan wants them. Ukraine already has them. The US wants them. This is a simple case of front running the Pentagon. I think that's an interesting idea to play. I think it's best played in private markets, though. There's some interesting space and drone companies in public markets, but you got to time it really well. So let me see what the other questions are. Scroll up. Okay, awesome. Well, I think we covered a lot of ground there. Thank you so much. Really appreciate it. Go to lumidainvest.com and you can access the app. Give us your feedback. We really appreciate it. Thank you for being a part of our community. We're going to have some more exciting news to share this weekend too in our Lumida Ledger newsletter. And again, you can listen to this podcast on YouTube. Look up Lumida Non-Consensus Investing, or on Spotify or Apple or wherever else you get your podcast. Thank you so much. Thanks for joining. Make it a great day.